Investors are compensated with higher rewards when they invest in emerging markets.
Fundamentals of the emerging market economies are improving. You look at the things like current account surplus or deficit.
Can you help us understand yield premiums and why investors are compensated with higher rewards when they invest in emerging markets?
Yeah, thank you for your question. That's a good question. Question for theoretical finance theory, but I'll try to be as practical as possible with my answer. So generally, you measure the risk premium as a price for the government debt in that market, let's say Indonesia, versus the US, Germany. Those are considered the prime market. And the difference between the AAA government-rated debt and how much Indonesia government is paying, this is called a spread. And this is the measure basically of the premium. The investors get paid if they buy the government debt of the emerging market. And then this premium is also applied in the commercial lending, in our case. This spread has three main elements. There are a bit more of them, but three are the main ones. The one is the credit risk of the country. So United States or Germany is less likely to not being able to repay their debt, the treasury bills, than a government in some emerging market. So that's first. Second, the governments are getting their tax income in a local currency. In case of Indonesia, it will be Indonesian rupiah. But the government debt denominated in USD needs to be paid in USD. So it means there's a currency exchange risk. So if the Indonesian rupiah went to the free fall, the cost of the borrowing in the USD will expressed in the rupiah would be higher, and that could again create problems for the government to repay. And the third one is a more market liquidity risk. So typically the emerging market debt is traded less than the US treasury bills, treasury notes. Therefore, there's a risk of illiquidity, and that risk of illiquidity is also reflected in a higher price. Investor needs to get paid to invest in this debt. But what we can see, like in 2025 specifically, that those spreads are tightening. So it means that the emerging market attract lesser spreads for two reasons, because USD has been depreciating. That's one. Second reason, the fundamentals of the emerging market economies are improving. They are healthier, and that reflects in the overall spreads of the credit markets.
That's a very interesting piece of information. And why is it like that? Is it just because the emerging markets are developing now and they're getting closer to the developing markets, or is there anything else?
Emerging markets are developing. There are fiscal worries about in the US, right? The US rate is the benchmark rate for most of these emerging market debt. So it's a both working, right? On the both ends. And also, it could be because the benchmark rates are relatively high at the moment, historically in the past 15-20 years. So that's why the spread cannot be enormous as well, because the emerging market governments wouldn't be able to pay an enormous spread. So that could be another reason.
And my last question is that emerging markets is still quite a broad term. It covers a lot of different countries in a lot of different parts of the world. Is there a big difference in the emerging markets that we have opted to invest in terms of their credit quality?
Well, yes, of course. Yes, of course, there's a difference, and you need to like watch the difference country by country. So there's no generic answer. I think the chronically problematic government debt has been Latin America specifically, but we invest in Europe, Asia, India, and those places, and those are like relatively fine. Also, the smaller country, the risk is a bit higher, right? But there's a lot of consideration, and what we do in our credit risk assessment when we evaluate the macroeconomic environment, we look at the things like current account surplus or deficit. We look at the proportion of the domestic debt. We look at the trends of the local currency. So we take a lot of these consideration into account when we are making these decisions about should we invest and how much it should be priced.
Understood. Thank you very much.
Thank you very much for your questions.